William De Vijlder, Chief Investment Officer and Head of Strategy with BNP Paribas Investment, joins us. William, good morning and thank you for joining us. William, the key talking point is really budget. Do you think this time around Indian budget would be an extraordinary event, and do you think that will really act as a catalyst which would nurture further growth for Indian economy?
The budget is indeed a very important event also for foreign investors. What we're really looking at is not so much the deficit number in its own right, although there is no need for us to see an increase in the budget deficit to support the economy. What is more important is how the money is going to be allocated. So what we really want to see is that the financial means of the Indian state are used in a more effective way, more productive way. So there's a push towards more capital expenditures, infrastructure investing to boost the long-term economic growth rate of the economy and less of an emphasis on subsidies.
William, hi, morning. So which sectors from the Indian equities are currently on your radar, since the government may focus on a few pockets in the budget?
Well, indeed the government's decisions is an important point, but on the other hand, the market of course anticipates you have to look at it more from a medium-term perspective, considering everything that's going on in India. So what we like as sectors is industrials, cement, and also private sector banks. And this actually has not moved that much over the course of the past couple of months in terms of our preferred sectors.
William, Indian markets have touched record levels ahead of budget. From these levels, do you see further upside, and are foreign investors waiting for a correction to put in funds?
There is, provided that the right things are being done. What we have seen in the Indian market is, of course, since the high levels of tensions that we saw back in May last year and then again in late summer last year, has made a fantastic comeback, and that was of course inspired by what happened on the monetary policy side, the credibility from the central bank, but also the anticipation to the election outcome. That has then been confirmed. The market continued to power ahead. So now the question is, okay, what about delivering? And the budget is a big test in that respect. So what's really key here is that the right announcements are made in terms of how ambitious the economic policy is going to be to boost the structural growth of the economy, meaning in a lasting way. And this is then of course going to be instrumental to give international investors and domestic investors alike more confidence in the capacity of Indian companies to grow their earnings at a faster clip. That means that we actually have a very supportive view of the market from a medium-term perspective. Say on a 3-year horizon, we think that GDP growth will accelerate, that inflation should remain under control, and that would also mean then that Indian companies will grow their earnings at a pretty good rate. That means, concretely speaking, that if you have, let's say, expected real GDP growth converging towards, say, 7.5%, 8%, that you would then have a very decent expected growth of earnings. However, and this is very important, the confidence has been built up to such an extent, the hopes have been built up to such an extent that disappointment on the budget would then of course cause a decline in the market, which by the way would mean that the government would understand that it needs to step up to the plate, and that would then be also an attractive moment to get back in the market if that happens.
So how would you rate India as an investment destination versus other emerging markets?
But the interesting thing is that we all know about the structural strengths, demography, to be very clear, but also the structural challenges, and that is become more efficient, do something about infrastructure, and most importantly increase productivity. What's important is that on the political side and economic policy, we now have a unique opportunity to make very significant progress in that direction. So, and we have a very credible central bank. That is a pretty attractive combination of factors to address these challenges. So this means that you now have a story which can be very attractive for international investors on a more ongoing basis. You have to make comparisons also between India and other markets, and there you see that the mix of factors, positive factors or opportunities in India is a pretty powerful one. The nuance I would bring to that picture, however, is that the market has gone up so much and the currency has also strengthened a lot. So for people who want to make quick money, there is indeed, I think, a temptation to look for other markets and to see whether there are opportunities there. But then, without going into too much detail, if you look at Indonesia has also had a great run. Philippines have had a great run. Even Thailand did well. So I think that in an Asian setting, India still has pretty attractive fundamentals to go by. But let me re-insist on the importance of having the right economic policy so as to deliver on the expectations that investors have put in the economy and in policy.
William, I just want to get your views on the currency as well in the near term. You know, the rupee touched 60 levels recently.
It has strengthened significantly, but in our view there is no risk that it would become too strong. That is actually in a way a concern that at least theoretically you could have. And that would of course then have a negative impact on certain sectors, the export-oriented sectors in the economy and the stock market. We think that considering the inflows that we have seen in the economy and which should actually now, although continuing, albeit on a slower pace, considering that India still has an external deficit that needs to be funded, that would mean that additional strength from the rupee should be less overwhelming than it has been in, say, the past 9 to 10 months. Also, if it would turn out to be like that, I think that would then pave the way for the central bank to start to act upon it, be it by building up more reserves than it has been doing already, which means currency intervention, or by contemplating to scale back, to cut back on the interest rates. But that, of course, would be very much dependent on how much an impact rupee strength would have on the inflation outlook. So there are things that can be done, and our view is that the authorities, specifically the central bank, would step in if there would be a risk that the rupee would become too strong.
William, IT has been a core holding of your portfolio. Now, Indian IT stocks this year on a relative basis have underperformed policy or beta related stocks. What is your view on Indian IT stocks going forward?
Yeah, we're becoming more constructive on these stocks. We think that rupee strength, which has been a factor in the past, is not going to be as much of a factor going forward. So we are taking a more positive view on these companies, and yeah.